All right, good afternoon. My name is Jermaine Russell, and welcome to Stocks and Squats. Today, I will be going over my trades from June 8th to June 12th. That was last week. I know right now it is June 16th. So when you get this, or if you look at this video, you will see that it's typically running on Tuesday, June 16th. But I am reviewing the trades that I made last week. I recorded this video actually yesterday, but for some odd reason it didn't save. So I think the last like 2 minutes I was talking to a screen that was not saving. So this it's quite interesting when you become more of a trader or a day trader or an investor, and you are looking at the chart itself and you want to match the chart to whatever your analysis is, and you're trying to get a better understanding of where you fit with the company's movement or price action or whatever news that they might be circulating. You start to realize that you spend a lot of time in front of the computer. So there might be little nuances that you don't realize, particularly if you're recording for other people, that are not available at the time. So so yesterday I was supposed to have this video out yesterday. It didn't happen, but I will have it. This will now be available today, and I will make sure I cut down a little bit more on this time too, so that you're not just looking at my chart for 45 minutes, but you are getting precise information that will definitely help you in getting a better understanding of chart reading, chart analysis, and where your behaviors might lie during this time. All right, so as you can see, I'm kind of just looking at this chart right now. This is something that I actually traded today on Tuesday. I will talk about it next week. So this will be just something to talk about next week, because it's a very favorable thing to talk about for next week. But anyway, let's get into trades. So last week was not the best week. I started off pretty strong. Monday and Tuesday was pretty good, but I ended very weak. I think a lot of the things that was happening, not just in my own personal life, but within the whole stock market itself, was showing a vicious downcline. So when when news start to circulate and you are trying to day trade, it's always good to stay on top of the pulse of the news cycle. And by the way, if you haven't done so, please click like or subscribe to my channel. It gives me a better assessment of not only what you are watching when it comes in what I'm giving to you, but it also gives me an idea of things that you possibly would like to see, or get a better understanding for your own trading and for your own education. Anyway, so like I was saying, sometimes it's not even sometimes, but all the time is best to really stay on top of these news cycles. So whether you are, watching CNBC, whether you are watching Bloomberg News, whether you're watching Fox News, whatever news that you're watching that is associated with business and the financial markets, just really stay on the pulse of that. If you have the Wall Street Journal, which I subscribe to, these are the three things. I don't watch Fox News when it comes to business, but when I'm not, personal preference. But like when it comes to whatever it is that you need for your understanding of the of how the news is working, you should hold on to that and really use that day to day, right? And make it really a consistent practice. Make it a habit. So today I'm looking at we will start with looking at a couple of these beauty products or beauty companies. COTY is one of them, COTY. COTY was a stock that Kylie Jenner ended up selling, and when she sold it, she ended up saying that it was worth billions of dollars or what have you, and then about a month later we find out that that was a farce, and that she really probably finagled the numbers, and Fortune, I guess it was, or one of these companies that monitor business, financial business and legitimacy. And I said that it's not the truth. So what happened is that we get the other Kim Kardashian. She comes in and kind of helps the stock kind of get some movement, and that's what happened here. Got some movement from that Friday, which was the 5th, and then going into the Monday, which was the 8th. So I end up buying in on that Monday. And then on this Monday, it actually went higher after hours. So let's zoom on in, and to give you a better understanding of what's on the actual chart itself, I use these EMAs, right? The 50, the 100, and the 200. They're color coded: green, yellow, red, for a reason. So like I always I'm not going to get into those reasons. I'll probably say that for another video when I specifically talk about technicals. But essentially, this is what I look at when it comes to really identifying where I should buy and where I should sell when it comes to stock movement. So I saw that not only did this stock close above the 50 EMA on the year chart, but on the day chart, let's go back a couple of days. It's not going to be the same because it's not going to be the same for 5 days on the 2-minute chart. Or each candlestick represents 2 minutes, but it's not going to show. It's not going to show when I actually bought, which is over here. So let's go to the hour chart. That's why I recorded it yesterday, so you'll be able to see a lot better of the movements. But essentially, I bought here on this Monday, and I bought at 607. Even though I saw it moving throughout the day, I still bought it probably a little bit higher than what I wanted to. And then we see in the after hours, this gray shaded area, that it went higher. It's not like I don't have day trades or I didn't have day trades during the time. I could have sold it for a profit, but I was looking more of the long-term effect. And being that, it does not follow my typical movement of a chart setup. Typically I like the reverse of the EMAs before I hold it for a long term, meaning that I like the green EMA price to be higher than the yellow, and then the yellow higher than the red. I like it like that. I like that better. But I tried the reverse. The reverse didn't work for me. I know a lot of option traders like this type of setup, or at least the ones that I know like this type of setup. It's not my bread and butter, and I know that after last week, it really did show that to me that this is not a typical setup that I would particularly like to move with. But it still can show some type of movement when a stock, as you see it on the hour chart, you see a stock is moving with the 50, 100, and 200. It's trading over that. It can go exponentially higher. So this is what I like to see on the chart. Just that, on the year chart didn't show it, showed the reverse. So I ended up selling on that Wednesday because I really held it all throughout Tuesday because I didn't want to sell. I kept on thinking it was going to go higher, but as we can tell, if we look at not just the price movement on the year chart, but if we look at how it was testing the 50 EMA and how the MACD was also showing some deceleration, so the momentum was starting to trend downward, and then also the RSI was showing that it was significantly overbought on the hour. So holding it hour by hour was not the most promising idea, and I found that out to be true because now, as my screen kind of froze, now it started to pull back, and as it pulled back, that's when it was starting to, relieve some of that tension that it had from that overbought pressure or the momentum pressure. So, it pulled back. This is something to really, really keep an eye on when you are buying stocks. That if you are looking at time frames, you should really layer all your time frames to a point where you can be able to see that buying at support, which might be near the 200 EMA, is a whole lot better than buying when the stock is moving towards the overbought, which is on the RSI. So like, let's go back, and I know it doesn't show when I bought, but at least it shows that when it made this when the stock came down, it came to being oversold, right? So now that it's oversold, that's closer to a support area, as we can see on the day that on that Tuesday, that it's more of a support area, and because it's more of a support area of that you could possibly buy it there for a day trade, right? So you know, really using day trade versus long-term trading or investment trading for a stock like this, particularly when the EMA is a reverse, makes it, I know, a little bit more difficult. But this is where that precise understanding of price movement, float size, volume really comes into play when you are trading a stock like this. So instead of taking a win, which I could have, it wouldn't have been a big win either. I would have probably at the most got out at 650, or at least would have been somewhere close to 50 cents a share versus taking a loss, which I took a loss at about 70 cents a share. So, just really identifying that, right? You know that it's overbought. Since it's overbought, why try to extend that overboughtness, quote unquote? I'm doing air quotes. You can't see me. And then hopefully, I'll have my new laptop screen. I'm still waiting for it in the mail. So you could be able to see. My camera's messed up. That's why you haven't been able to see me. But on my laptop. But at least you can get a better understanding of this chart movement based on not just the MACD but the RSI as well. And then I also tried another stock, the same thing that was in the beauty supply market. ELF brand has been one of those stocks that I've really liked before. I've been wanting to get into it before, never got a chance to. As I go back, I'm sorry. Let me go into the year chart. But like I said, this is something that I've been wanting to get into before. As we see over here, it found support near the 200 EMA, like I was saying, right? So the support can be at the 200 EMA. Support can be when the stock goes really to oversold. But even here, even though it didn't go super oversold like it did over here, it was oversold. It was close to, as close as it could get. So this is where it was oversold at $14, right? And that's where the support was. So even though it came up a little bit, it came back to support, and then it ramped back up. And this is where the EMAs, the 50, the 100, and 200 are in that order. Let's even go back a little bit further. When that 50 did cross over to 100, this is probably my favorite indicator now, where it's called the golden cross. I'm air quoting again, where you have the 50 cross over to 200, and the stock just exponentially moves higher, right? It just goes higher. It might retest the 50, but this is a common trend. When you have the 50 cross over to 200 and the 100 crosses over to 200, the stock tends to move higher. It found resistance around this $18 area. I'm not sure if it went higher. No, it did. It spiked a little bit towards the $20 area before coming back down. And then once again, what did it do? It came back to test support. So this is what I'm talking about when it comes to these EMAs. It's very helpful for me to really not only see where the possible buy-in could be near that 200 EMA, but also how close it is on the RSI. Does it show any signs of balancing out there or leveling off, where it can just go to a point where buying is possible? And then if buying is possible there, then maybe it can go higher. So this is all on the year chart. So this is, like I said, this is something I wanted to buy before. I ended up buying it here. So let's go a little bit closer on the year chart. We see that it was starting to form that same golden cross, that one that I love so much. And right here, it had a strong uptick, where on this day, it really just went up a little bit higher than typical. right? Well, not than typical, but it went higher, and it went higher. I think mainly as a influencer was this whole cross of the 50 over the 200. So if we go on to the year, hour chart. Sorry, we were just on the year chart. The hour chart just suggests that each candlestick represents 1 hour, and we have it here. We see that when the 50 crosses below the 200 EMA, the stock price tends to go downward, right? When the 50 EMA crosses 2 and above the 200 EMA, the stock price tends to go higher. You can't get more simpler than that. That's something that is very, very helpful. It gives more understanding and meaning to price action. So I bought here right when the market opened, kind of thing. And not only did it go up higher, it kind of tested this $19 area. Let's zoom in a little bit more. So it kind of tested this $19 area, and once again, just like no, right here actually, just like with COTY, I should have taken my 50, maybe 60 cents a share on this because the momentum on the hour was showing that it was starting to die down. The RSI was also starting to show that it was dying down. But on the minute chart, and you really can't see it, I wish could go back one more day. I have the 5-day 2 minute for a reason. I know on Thinkorswim it doesn't really go back 10 days on the 1 minute or the 2 minute, so it kind of makes it harder. The 2 minute is closer to 1 minute, so you kind of see what it looks like on the 1 minute chart, but you don't get that extending past 5 days. So only unless I can figure out something later or what have you. I haven't seen it thus far, but maybe if I played with my platform a little bit more, I can find that out. I might have to ask one of the representatives. But anyway, can't see where I bought, but let's go back to that hour chart. See, I have 10 days, 15 minutes. It's not really the same, but you kind of get the idea. So here I bought like around that 9:45 area time frame, and then it went to a high of 1889, and then after hours it was trading sideways until the pre-market came, and then it came down. It's still showing weakness on this time frame too. It showed weakness going into the time that it spiked up higher on the day. So when you start to layer a lot of the technicals, you start to see where you probably didn't go right, or you just ignored certain technicals that would have helped you move a stock higher, right? So that would have helped you understand if a stock would move higher. Sorry, that was my previous sentence was a little incomplete. So so I didn't earn on this one, which I was hoping, but I did cut my loss a lot smaller. So it was more of a 29-cent loss than like a 50 or 60-cent loss, because typically I was allowing my losses to run more than having my winners run, and that was a pure mistake. I could have allowed more of my cut my losses a lot quicker and allowed my runners to run, particularly once they went overbought. So we'll see. I'm more of a day trader. I'm not a long-term holder, and I allowed influences of option traders to really dictate my style of trading, which is fine. It's not their fault. It's more of my fault not staying true to my style of trading. So it caused me to really lose out on the wins that I could have taken. And also I've been pretty spoiled. At the beginning of the year, prior to all this coronavirus happening, I've been taking wins where there were $1 a share or more, and now having to learn to take these singles where it's more of like 30 cents, 50 cents. It does get a little frustrating because I was just so used to just taking $1 a share and not having to worry about it. So now I have to be a little bit more precise in not just where I'm buying, but where I'm also selling. So Elf brand, I did not do well on that one, but I do see this one much better than Cotty, but I do see this one coming up a little bit higher to retest $20. Obviously not today, but maybe on another day. Lost 80, and I lost it twice. Like, this was just one where and it's back to where I imagine it being. I did not take any of my wins the 2 times that I bought in. And this one has been, usually this has been a good stock to me. And it's doing all the things that I like. The 50 EMA is over the 100, is over the 200. It found support. It found support right around this whole $9 area, maybe even 10, even 11. It was finding support, and it's been defining support with so much emphasis too. So when I originally bought in, which was on this day at 12:20, I said, you know what, this stock has not only closed above the 50 EMA, but it's a red candlestick, which usually gives me caution, but it closed over the 50 EMA. What can go wrong? And what went wrong, as we could tell, or as we will see. Let's go to the hour chart because we still can't go to 5 days. Here we go. So we're here at the hour chart. I bought here at 12:20, and as you could tell by this candlestick, and as you could tell by the MACD, and as you could tell by the RSI, it was all going downward. It was all going on the downside, and I ignored it all. I anticipated it really even going closer to 1270. Now, another reason why I have these color coded as red, yellow, and green, these being the EMAs. The reason why I have those color coded is particularly because when it's red, that typically means stop, right? So if a stock is trading and it goes somewhere near this EMA, that's telling me that, hey, it should stop soon. It should stop, and that's what happened. It came probably what, like it was here around this 1220 area. Came up about 50 cents more, but it came right back down. Right, it stopped, came back, and then it went to the green, where the green is go. The yellow is caution. This like look both ways. Where are we going? And if you look both ways, you can tell that, hey, it is testing support once again. It's testing some type of support on the chart, not support of the EMAs, but the actual price action support, right? So that price action support that it's testing gives you a chance to say, hey, look both ways. Is it going to continue to go down, or is it going to go back up? It didn't. It came back down to the 50 EMA before spiking on up. Before it even spiked up during this pre-market time, it was definitely going down. It was on the minute chart, since you can't see it on the minute chart because all you see is the hour chart here. But on the minute chart, it was saying that it was oversold. Now, if I just waited maybe like 2 more minutes, 5 more minutes or something, I would have, reaped the reward and sold into this spike, because from 1220 to 1320, that's the dollar a share that I was looking for over here. It didn't happen because I was so worried about this spike. And I said 1220, but it went towards 11. What was it? It went to 11 something. Where did it go to? It went to like 11. Yeah, 1120. It went to 1120. So it went a whole dollar a share below where I bought it before it even had a chance to spike up. And it spiked. Like, I wish I could show you the minute chart on this one. Let me show you the 15-minute chart. Maybe it doesn't give you the same pronounced that the minute chart does, but it still shows you what it did. So here on this day, like I said, I sold already in the pre-market because I was like, enough pain already. See, there goes my sell order. And it ramped down, and then it ramped right back on up. I end up buying on the way up, which probably not the best. I chased it, and then it pulled back like it should. I could have bought more. I didn't, just because I was already nervous of how I bought it already. I bought it when it was starting to spike, not before the spike. Um, and then it bounced. It bounced off the 50, bounced off the 50 again, and then after hours, it went to retest that previous high, which was 1350. Uh, then market open on Friday, and what happened? It collapses. It collapses on down to 412.14. So the main reason why I even bought this stock is because that LAKE, Lake Industries, they came out with earnings, and their earnings was good. APT mirrors a lot with Lake. So whatever, if Lake does well, then APT typically does well. Like today, APT is doing well, and it's based probably off the momentum of Lake. See, Lake is up $1.60, $1.60 a share. So they usually run in tandem with each other. So with this one, that's the main reason why I bought it. It was at a good price. I felt like it was going to have good price action, which it did. It's always treated me good before. Even though it treated me well before, it still didn't do what I wanted it to do, or at least I did not trade it the way I wanted it to trade. So I ended up selling it for a loss twice, and I sold it pre-market. I sold it during the market day on Friday, and it bounced right off this 50 EMA, 200 EMA. I'm sorry, bounced off the 200 EMA. Like I said, that's kind of like support. Like the RSI. The RSI kind of shows you where support is, and then Monday it went up higher and blah blah blah, and then today is high. So I end up losing on this one unnecessarily, particularly just because where'd you go? Particularly because it was just my own anxiousness, my own nervousness, and the markets were pretty disastrous last week. Particularly on Friday, it was even worse. So this was something that I could have held, did not hold for the long term. They have options being called on this coming up Friday for $15. There's a $15 call on APT. So this is something that every time it dipped down, I could have just bought more, but I chose not to. Because I really want the day trading earnings. I don't want to have to wait every week to reap my reward when I could just get it on that day and call it a day, right? My next loss was Grubhub. Was another disappointment for myself. Only about 25 shares because I didn't want to put too much into it, thinking that it would go up, and then it don't go up. And so I really was just more focused on how can I make this stock more. To me right now, I'm thinking I should just play it as a day trade, and particularly the reason why I even bought this, the main reason why I bought this is because Grubhub was being sold to a European company, Just Eats, and Uber tried, Yum Brands tried, but for some odd reason the deal didn't go through. So now Yum Brands is suing Grubhub for I guess their false claim. They say, hey man, we had a deal, and you broke it off the deal, and Grubhub is like, no, whatever. So apparently there's some litigation that's going on right now, and we gotta think Just Eat is an international company. I don't even know why Uber would even try to, Uber Eats obviously, but Uber is not one of those companies that I think is ahead of its time. I think is people are overly confident in it. People think that it will, when you think of, car sharing, Uber, let's get an Uber. Like, no, just get a car. because Uber does not treat its employees right. So, like to me, it's not one of those companies that I would think that hey, I should invest money in it or have them buy out another company. So Grubhub, I end up selling it a little bit. I bought it, in the after hours once I found out the news, and I should have just sold it in the pre-market. So typically, that's what I do. I end up selling my shares, overnight in the pre-market because it's easier to deal with. If I buy it towards the end of the closing day or after hours, I know that in the pre-market it's easier to sell because they're going to have, a lot of momentum going into, the market open. The market hasn't opened yet, but there will be a lot of movement heading into the market open. So this was one that I should have sold a lot earlier. Didn't. Um, I only bought 25 shares, so like losing $50 is nothing. But really looking at the upswing, right? From 620 to 66.13, 62.70 to 66.13. That's roughly $3 a share that I could have bought, and it's also a good um, confidence builder when you are trading and you trade with a positive return or a positive trade. You executed on the buy and the sell side, and you came out with a positive return because you followed your technicals to the T. If we continue to look at the MACD showed that it's decreasing, the RSI showed that it was decreasing, all on the year chart. So, I don't want to get into more on this one. This one was what it was. It went high. I didn't sell into strength, and I ended up losing on the downside, right? So today it's back to where kind of near where I bought, but I don't know. I don't know. I'm not even trying to look at it right now. The next one, and I'll probably make this one the actual last one, which you know, cars and hydrogen fuel, electric, whatever it is, you know, this industry right here is going to be one big booming industry. Let me just get a little bit more of my coffee here. Hold on. So, um, so with this one here, it is one of those stocks that not only did I earn on the upside because I followed the technicals, I also lost on the downside because I didn't follow my technicals, you know. So I think I actually lost more than I earned. I really came out like balling on this one. 66, I bought in at $66.50. It ran up to $94, and I sold. But for some odd reason, I said, you know what? Let me buy again, and I bought. Um, I don't know why. I don't know why I bought. I'm sorry. I sold at $83. I didn't buy it. I rebought at $94. That's what I meant to say. So I bought at 66, sold at 83. Easy win, easy gain, nothing crazy. 25 shares. But for some odd reason, that stubbornness was like, hey, it's going to go to 100. And I bought more at $94. And then when it came down, as opposed to just saying, hey, let me just sell, back at this 90. Because when the market opened, it actually opened, I think it came up to the 90s at one point. I could have just sold for a smaller loss, like it was only 25 shares, but for some odd reason, I had this mentality that no, this stock is going to go higher. And after doing some further digging, not only did they not have like a store or any cars to show for it, all they had was a backlog order of people that wanted to buy the car, but there was nothing really substantial, and that their market cap was higher than Ford, which Ford has been, producing cars forever. So how is a company without any cars, any, sale model, and without anything really that's tangible for the average person to see, how would they have a higher market cap than a car company that's been around for nearly decades? So, that was all of more of the reason why the stock needed to come down. And it did. I even bought more when it came down. Um, I was thinking, hey, let me buy some more because it will pop back up, and yeah, it did. It went up to the 80s, but you know, it brought down my cost basis to $90. But I end up selling more shares, really at $70. So I end up losing $20 a share. Um, so giving back all that I pretty much earned. Um, so this is something that like I like to look at, particularly with IPOs. IPOs, they will run the very beginning just because they have no real resistance, right? A lot of times they don't have a lot of resistance when they first come out, especially if they're hyped and overvalued and all this other stuff. So this was hyped and overvalued and all that other stuff, and I still like allowed my greed to get the best of me, and there it went, you know. So I will always say, you know, trade safely. I didn't trade safe last week. I lost nearly 1,700. You know, that was unnecessary. But I'm cleaning up a lot of my trading. I'm cleaning up the way that I'm looking at my buy-in prices. I'm cleaning up the way I just look at, you know, the markets all in general. Just because, you know, the markets are a means of profitability, right? You can profit on the short side or on the long side. You can profit as a long-term investor or as a short-term investor or as an intermediate investor. But however you do, if you follow your strategy, if you follow your technicals, if you follow your rules, then there really shouldn't be a reason why that you do not succeed, right? So there is a book called the successful, what is it, seven successful trading patterns, or you know um, I think that's a really good book, very helpful book. I read it once, I'm reading it again just to keep in my mind what is very fruitful for this trading environment, particularly now with everything in such in disarray, whether it's you know, economic disarray, market disarray, social disarray. You know, we have so many reasons why not to follow our own means of success. But now, with these means of success really in the grasp of our hands, it's all about utilizing those tools to become a better trader, a profitable trader, and a better person altogether, right? So, hopefully, this helps. I traded a couple more, but you know, those are the ones that I really like lost my money on. I I should have you know done a whole lot better. CSP, CSP I sold for profit. Um, what else? DRIO. What did I sell? See, I only bought 75 shares, or sold 75 shares. So I must have bought it here. I can't even see it right now. Where did I buy you at? Why does it do that? There you are. Yeah, so 685, also there's 662. So this was a small, negligible loss. So it wasn't anything crazy. Um, let me see, CREX. I bought at 316, sold at 298. So that's a small loss. Uh, IMRN. IMRN, that was, huh, yeah, this one was a bad loss, and this one I think was had some volatility issues. Yeah, I think this was one of those that I did not want to buy, but the market, like, yeah, it had a halt, and I put in an order before the halt happened. But once I saw that it wasn't going in my direction, I erased the halt. But it still like took in my price, and I said, okay, let me figure out what I need to do. And that was another thing. I did not make a plan prior to entering the stock, and that's why I end up losing on this one. So, you know, I deserve to lose. And not only did I not have a plan, I bought more after only putting in a small amount of shares. I was like, oh, okay, I'll buy more, and I bought more, and then I lost more, right? End up selling, you know. Um, and I think I end up redoing the same thing again, right? So like this was just one of those things I should not have gotten into. You know, I lost twice on it, right? So you know, and it's probably because of revenge. I was thinking I was going to revenge trade this one and get my money back, and you should never revenge trade. So um, that's it. Like, you know, I really didn't do as well as I could have or should have. DYAI. Yeah, I sold it higher, but it's whatever. For 400 shares, that doesn't matter. Like what matters is like when you lose, you really go over why you lost and what it is that you did lose. So that's what I'm doing right now. When I'm going over it, making sure that I don't repeat these actions again because how else am I going to be profitable if I am like making these silly, stupid mistakes, right? So, so far this year I'm profitable, but I need to continue working on that. So, hopefully my videos help. If you like anything that you saw, you can just click like, you subscribe to my page, and I will continue to put out videos in stocks and squats, not just of stock videos, but also fitness and health videos. Just because these are the things I like to do. I like the stock market. I like to work out, so I try to share as much as I can for people that want to learn as well. So thank you so much for joining, and hopefully I'll see you at the next video.